You threw in your call for 4% rates several months ago. I'm curious as to how your position has evolved just in recent weeks. Where are you looking for the 10-year yield to go?
Oh, Vonnie, I suppose it's going to follow whatever the Fed does in the short range. I would guess it'll probably move down another 50 basis points or so. It's slowly creeping that way. The fundamental problem the Fed is dealing with is obviously the strength of our economy and the things that relate to that. But the major thing they're dealing with is really the international situation. And thank goodness, Clarita mentioned it again this morning. The trade disruption is clearly the most visible part of that. It's far and away not the whole thing by a long shot, but it's the thing that counts in the economy. And as you become more worried or less certain about your supply chain, if you're making anything, you start to adjust. That's been going on for a while now, long before the friction with China heated up, but it's accelerating and it's being felt. It's primarily a capital spending and inventory sort of thing. You adjust in advance of what you think the trend might be. And as the trend turns more negative, you adjust more. And there's a cost to that. And that cost is gradually being felt. Now, our central bank, the Fed, is more or less, I use the term trapped, but heavily influenced by this. They can't get away from it because it's a lead factor. It's a sensitive factor geopolitically in discussions, but it's reality, and it influences our economy. It influences economies in Mexico, Southeast Asia, and surprisingly, in a way, starting to influence some areas in Europe, but that's not real clear yet. So it's more of a worldwide thing. The world economy is being influenced negatively by the trade friction, whether it be barriers or the worries. So the Fed has to acknowledge that, and they're saying, okay, let's get ready. We don't want to have to come in at the last minute to support. We don't want to get pushed into the corner like the European Central Bank is. But they have limited room to move. So I feel very bad for them. They're walking a tightrope. You'll start to get more dispersion, I think, from the regional bank presidents as their local areas get hit or don't with this. And so that's the setting they're in. They're getting more cautious. Where it's going to end interest rate-wise, I can't tell you.